Welcome to the Rise of Cryptocurrency show at wealthresearchgroup.com. Cryptos are absolutely going nuts right now, and it's important if you haven't made a fortune with the first wave of Bitcoin, Ethereum, Monero, Stimit, all of which Wealth Research Group suggested, and others which have brought tremendous results to early investors, that you now begin to educate yourself as the second wave of profits commences, and as the first wave of publicly traded crypto and blockchain companies are now getting listed on major exchanges and allow us to own a piece of this pie in a more traditional fashion if you're not tax savvy, or even if you're looking for a more traditional way to do it. Today I'm speaking with Jimmy Song, who is a Bitcoin developer, and he's also a Bitcoin entrepreneur. And you can obviously, this will get a little bit technical, but not too much, because I want to cover some exciting news in this space. So Jimmy, first of all, how are you, man?
I'm good. Thank you so much for having me on.
You know, I'm glad that you're here, and the reason is I want to start with asking you just to describe Bitcoin and other cryptocurrencies and the blockchain, or blockchains, and what are they in very simple terms, so people can make the distinction between cryptocurrencies and fiat currencies. What are the differences?
Yeah, sure. So the way I describe it to people that are sort of new to Bitcoin is a global ledger. It's a lot like the ledger they have at your bank, right? Like when I send you a check for $50, it debits $50 from the bank, debits $50 from my account and adds $50 to your account. They don't like physically move $1 bills from a bin that's marked by me to yours. It's just sort of done on a ledger, and then they sort of settle the accounts later. It's a lot. Bitcoin and other cryptos are a lot like that. Except it's a global ledger, and everyone has sort of these pseudonymous accounts that you can use to send money to other people, and a lot like checks, you sign over money, not with like a physical signature, but a digital signature using your private key. And this ledger is copied all around the world. So right now, the Bitcoin blockchain is around 140 gigabytes. And anyone that wants to can download the entire ledger and see how much any account has. And that's how you can do value transfer. It's also capped at 21 million. There will never be more than 21 million Bitcoins that will ever exist. And unlike fiat currencies, where the central bank sort of controls how much of the currency there can be, Bitcoin it's guided by code. So you can't create more than that. And that makes it more like sound money, which is a wonderful property to have.
Now, just to clarify, Bitcoin doesn't have any more than 21 million. And what did the fork that split? How did it affect the 21 million number? Is it now 21 times 2? What is it right now?
Yeah, sure. So everyone sort of keeps the same ledger. When Bitcoin Cash, that was sort of the hard fork that happened. When Bitcoin Cash forked off, they sort of continued the ledger, but they have a separate, different ledger. So they have, their own coins on that ledger, but that's not Bitcoin. Bitcoin has continued, and it will only have 21 million. There's just this other coin called Bitcoin Cash that's also 21 million. Think of it sort of like if you're invested in gold, like think of it as like some completely other metal, like silver or something like that. It's a different thing. It may or may not have value. Obviously, a lot less merchants take it, and a lot less software and infrastructure is around Bitcoin Cash than Bitcoin. So take that as you will. It just happens to share a lot of the same ledger history. It's just a different ledger altogether, though, at this point. So it's not 42 million Bitcoins. It's just 21 million will ever be, and it's just a different ledger, if that makes sense.
Jimmy, why is Bitcoin exploding? Higher than 4,000. It reached a high of, if I'm not mistaken, correct me if I'm wrong, $4,419. Maybe it had a higher peak that I'm not aware of. But what is it that makes Bitcoin right now the hottest asset or the hottest play on the planet?
That is a great question. I've always felt like, the sound money is the major property that draws people to Bitcoin. The fact that a central bank can't just print more of it, makes it really attractive. I have suspect that a lot of asset values in, sort of traditional store of value things like, housing and businesses and things and stocks and stuff like that, they've also sort of gone up a lot. So may not necessarily be Bitcoin is just so hot right now, though certainly that's the case. But it's just that fiat money is being devalued a little bit, and it's going to all these money is going to these asset classes in unprecedented numbers. Why is it Bitcoin in particular? I would imagine part of it has to do with its store of value properties. You can store it very well without that much help. If you own a lot of gold, you have to pay vaulting fees and make sure that it's secure. And, you don't want to bury it in your backyard because someone could steal it and things like that. Cryptocurrencies in general are a lot easier to secure. And it's basically a 256-bit number that you store somewhere. And that's a lot easier to secure because it's a lot like a password rather than a physical thing that can be stolen. So that may have something to do with it. There are a bunch of other reasons that are more technical, but that's my guess.
Now, you're privy to a lot of what's going on in the industry, and my thinking with Bitcoin is people do not use it for its ideal purpose of transacting right now. People are more buying it for speculation. They're buying it to store it as a store of value. But what gives it value is the fact that other people are buying it. It's like a self-fulfilling prophecy. But we're not at the point yet where people are actually transacting with it like they do with fiat currencies. Obviously, because fiat currencies have been around for so long, all this banking system is very established, and it's easier to transact with fiat currencies. But is the price of Bitcoin, especially because it's so high, is it inflated right now in your opinion, or are we going to see higher prices just on mere speculation? But what happens when the speculators leave Bitcoin alone and speculate on another coin? Because if speculation is all it is, then what gives it sustained value over time? My question to you basically is, Bitcoin has value because other people give it value. The community gives it value. But if all Bitcoin is meant to do is to transact between parties, I would guess that the best cryptocurrency is the one that is most cryptographic, has all these layers of security and privacy to it, is faster to use, and with lesser fees. And obviously Bitcoin wouldn't be the number one coin to meet all of these attributes right now. So in your opinion, what is the ideal cryptocurrency, and what are its attributes for it to be a sustainable cryptocurrency that actually is transacted between people? And do you think Bitcoin can suffer a real crash when the speculation is fatigued?
Wow, lots to unpack there, but let's step back a little bit. We're talking about sort of two attributes of money, which is money has three roles, right? Store of value, medium of exchange, and unit of account. We won't really talk about unit of account because we're nowhere near that. But store of value, the ideal store of value has a lot of different properties. It's fungible, it's easy to secure, it's immutable, a lot of things like that. And in those terms, Bitcoin is almost ideal, right? Like it's very easy to secure, at least relative to other things like gold or real estate or things like that. It's also very fungible, right? Like one unit of Bitcoin is the same as another unit of Bitcoin, and you can just sort of take it. Unlike, gold bars, I've been in this industry where, like certain gold bars are not quite 400 ounces. So they're like lesser quality. And it's like some of them are 99.99%. Others are like 99.95%. And that makes a difference and things like that. So from that perspective, Bitcoin is almost ideal as a store of value. The other thing that you talked about is sort of as a medium of exchange. And I think that if you ask a lot of people that have been in Bitcoin for a long time, honestly, it's still not good as a lot of the other mediums of exchange, right? Like in terms of like paying for goods and services, it's a lot easier to pay with Visa or PayPal or something like that because you have like consumer protection and all these other things, and it's almost instant, and you can file disputes, and you're protected against all these other things. And I would fully admit that Bitcoin is not necessarily as good on those parts, and that's okay, because I think the main value proposition that Bitcoin brings, at least at this stage in development, is its store of value property. And it's a lot better than gold. It's a lot better than fiat, obviously, because it doesn't inflate. It's a lot better than almost anything else out there. So to answer your question, what happens if speculators leave? Obviously, I think the price crashes a little bit, and there's definitely a possibility for correction. There's Bitcoin has gone through a lot of bubble times, right? 2011, it went up to $30 and crashed back to $2. 2013, it went all the way up to $266, crashed back to $50, and then again in later 2013, it went all the way up to $1,100 and crashed back down to $200. This sort of thing is very common in sort of adoption, but long term, I think it's Bitcoin as a store of value beats almost anything out there. Now, what is my ideal store of value? I think it's pretty much Bitcoin. There's a lot of different properties about it that you really can't beat. Maybe privacy would be nice for medium of exchange and things like that. But as far as store of value, it's got pretty much everything you'd want in it. Plus the network effect, which is awesome, and this is something that you alluded to. If a lot of other people are taking it, then it makes it easy, it makes it a lot more liquid and easier to get rid of for some other good or service that you need. So in that way, it's a great store of value. And in fact, that seems to be what most people use it as. If you talk to somebody in Venezuela, they mine Bitcoin and then use it to, buy something on Amazon and have it shipped to their address in Venezuela. And they get a lot of stuff that way because the Venezuelan bolivar is not worth very much and it's inflating too fast. So for them, it became a medium of exchange because it's such a good store of value. Does that make sense?
Sure. I want to ask you about a very touchy subject, but I think it's important to address it. And I want to ask you also if you want to share with us what you do personally. If not, then no big deal. But we need to understand as a community right now, what are we doing with Bitcoin or other cryptos gains if we convert it back to fiat currencies? And even if we don't, the IRS is now fully investigating Coinbase, and they want to grab a piece of the crypto gains. So have you already had to file taxes with it? What are you doing? What are other people doing? Share with us. You're in the US, obviously. Every country is different, but can you explain to us a little bit about that aspect of cryptocurrencies?
Yeah, sure. And crypto is very, very strange in terms of taxes. And I fortunately have an accountant that understands crypto, and he tries to go sort of with the most conservative, estimates for taxes and things like that. I think he treats a lot of the income I've made as income, and some of the long-term capital gains, some as long-term capital gains and things like that. I try not to mess with the U.S. government. If there's one thing that I try very hard not to, risk is, it's like I'll take sort of all sorts of financial risks, but risks to my personal freedom, like being in jail or something like that. That's way too far past for me. So. This is something that I would recommend is, file your taxes, do everything by the book with respect to this stuff. Generally, you're not going to have to declare a lot of gains until you sell or use it in some way. Obviously, I'm not an accountant, so please go check with your accountant first. But yeah, that's a large part of how I've handled it in the past 4 or so years. But yeah, you got to be very careful. Yeah, and the tricky part is the IRS, at least here in the United States, they've said multiple things, some of which are contradictory. So yeah, you're gonna have to wait it out a little bit. Maybe you have to refile after you filed if things change. But yeah, I would just encourage people to be careful and listen to your accountant and make sure you do things well.
Jimmy, what are your thoughts on all of these ICOs? It seems like some of them, well, most of them are absolutely, I don't want to even say it, but they're scams. At Wealth Research Group, I've talked with so many entrepreneurs in this sector, and they've shown me example after example of how these ICOs simply suck money and that's it, it's gone. So I want to ask you, do you even consider ICOs as a legitimate investment worth the risk, or are you deciding to opt out of this game for now and stick to things that are more regulated, monitored, that you can have more control over?
Yeah, I mean that's pretty much been my view. It's that it's very risky. The whole funding model is very much like Kickstarter. You have no idea if they'll deliver or not. Oftentimes they're raising money on like a 2-page white paper, much of which is like sort of dissected. Right now there's sort of a mania. And I think the best description I've heard of an ICO is that there's greed on both sides. There's greed by the issuers because they think they can raise a lot of quick money, which let's be frank here, a lot of people have. And there's greed on the side of the buyers because they think there will be a pop very quickly and they can get rid of it and make a nice large gain. It's not. It's not unlike what happened in the late 90s with sort of like the IPO bubble, when like people were buying stocks and companies that they didn't know anything about, but they just counted on the fact that other people were doing the same thing and they would make a nice profit on the first day or something like that. Except obviously this is like done anonymously, so it's like 10 times worse. My gut feeling on it, I haven't ever really participated in an ICO, and I don't really plan to, at least at this point in time. My gut feeling is that the incentives are really kind of skewed here, and when you have greed on both sides, that's sort of the recipe for a bubble, and it's sort of an unsustainable thing. So I try to generally stay away from a lot of those. I mean, that's not to say if you're a trader or somebody that sort of thrives in those types of environments, maybe it makes sense for you. But at least for me, I'm more a fundamentals guy. I try to invest in things that I understand that I think will succeed, like Bitcoin. So yeah, for me, I just stay away from them and not play these games.
At what point do governments really come in and say, hey, we control the currency systems, this has gone on long enough, let's freeze everything, if this is even something that you think can happen, and let's reset and see exactly how we come in to the picture, because obviously we can't imagine that this sort of wake up in the morning, Bitcoin hits a new all-time high, the market cap of the entire space grows by another 10, 20 billion, and no government comes in and says, hey, enough is enough. Let's do a meeting on this and see what and come up with a plan. What do you think of government intervention within the cryptocurrency space?
Yeah, and this is something that as a community we've been struggling with for years. I don't know how many times China banned Bitcoin, but this is something that obviously a lot of governments are concerned about. Not so much from sort of we're the money issuer and we don't like any competition point of view. For a lot of them, they mean well, right? I think, or at least I like to believe that they mean well, in the sense that they don't want anyone to get scammed out of their money. It's more from a consumer protection standpoint. But I don't think they can stop it. A Bitcoin node Bitcoin is decentralized, so there's a lot of nodes all over the world, and they can, as long as they keep running and as long as someone's mining it, it should keep going. I think more likely governments are likely to take a lot of the concepts behind Bitcoin, like blockchain technology, and apply it to their own fiat system so that they can do better tracking and things like that. Government accounting is horrendous in general. Just nobody knows how to keep things accountable, and this may be a solution to a lot of the problems that governments have with accounting. Countries like Russia are certainly looking into it. So I would say that that's more the direction that they're more likely to go than necessarily saying, hey, we're going to ban this thing, at least for now.
Okay, so let's talk about the blockchain and really understand what is the blockchain, and tell us the latest on things that the blockchain ledger will be used for.
Sure. So a blockchain is it's easiest to sort of think of it like a distributed database, except, there's sort of all sorts of ways to prove that something is in it or something is not. And you know that the latest version of the database is sort of, based on what miners do to sort of harden the database. It's a write-only database, sort of. And you write into it by finding blocks, and it makes it very useful in that way because everyone has an agreed state of the world like you do in Bitcoin. Sorry, I forgot the second part of the question. What is that blockchain technology? And then what was the second part?
Well, my question is, what is it being used for right now? We know that many conglomerates, consortiums worldwide are putting in an insane amount of research and development into how they can incorporate their businesses in the blockchain, because they're going to save so much on legal fees and accounting fees, and everything that has to do with trust is not relevant anymore. So there's so many people so many companies that are looking into this, including, well, I don't want to name names, but it's certainly in the works. Can you share with us why so many companies will want to do deals and transactions on the blockchain, not on traditional not in traditional ways right now?
Right. So the nice thing that the blockchain gives you is sort of like a shared database that everyone sort of agrees is the truth. And that takes away, like you said, a lot of the legal fights that you might have. Did you deliver this item or not? One person, it's usually like one person's word against another or something like that, and that's where lawsuits arise. If you had a database that's sort of like the agreed upon truth, then you could just look it up. You don't have to do litigation and all this other stuff, because there's, you could check somebody's digital signature. Did you sign this document? Yes. Okay. Well, that, a bill of lading is typically what's used for shipments, and that sort of solves the problem. But both parties get a copy. Well, think of that sort of in a global context where you can have a database where you can look it up and there's digital signatures instead of sort of physical signatures on a physical bill of lading. Instead, you have something on a blockchain. Those are the sort of like applications a lot of businesses are looking at, because oftentimes their data is in separate databases and it's hard to reconcile differences between them. I know if you're in finance, oftentimes that's the trickiest thing. Well, did you give me an invoice? Did someone sign off on this and that? If you're in transport or shipping, did this many units arrive? Things like that. This is a way to sort of codify what the truth is, and instead of having pieces of paper, you could sort of have it digitally and in a shared state, so you can look it up. And now, is this really easy to use? Not really, because having a distributed database, having a blockchain is actually really hard, and syncing it, and there are all sorts of little problems that you have to do as a you have to encounter as a developer and figure out ways to solve that makes this particularly difficult. And to top off all that, there aren't that many developers that are available to program a lot of this stuff. Honestly, a lot of them are like in Bitcoin, and they invested 4 years ago. They're pretty rich right now, so it's hard to hire them as well. But it is a very useful technology. There may be applications, especially in a lot of fields where you do share data. I won't say that there are that many useful applications out there right now, but it's certainly worth looking into to see if you can do a lot of these things that we're talking about.
Hey, Jimmy, can you please tell listeners how they can find your articles and your website, etc.?
Sure. I'm on Twitter, Medium, and GitHub under the username Jimmy Song, @JimmySong. I also run a new I just started a new website for sort of a more technical discussion that's more digestible, and that's called BitcoinTechTalk.com.
Perfect. Hey, well, thank you for doing this. Thanks for getting on the show, and I would love to have you on again.
Thank you very much. It was a pleasure being on.